Right now, Toronto multiplexes are finally cash flowing again, and that does open real opportunities for real estate investors. But let's be real, not everyone can pull this off solo. Maybe you're tight on the down payment, maybe your income doesn't qualify for the mortgage, or maybe you just don't have the experience or the time to manage the project. And this is where teaming up with one or two other partners can be a game changer. Everyone brings something different to the table, whether it's capital, borrowing power, or expertise. And when you structure your partnership the right way, you can turn a no into a yes and scale much faster. Quick disclaimer before we jump in, we're not lawyers or accountants. We're a real estate sales brokerage that helps investors buy and sell multiplexes in Toronto. So this isn't legal or tax advice. In this video, we're just gonna walk you through how real estate investors that we work with are structuring their deals right now. If you are planning to team up on a property, make sure you talk to a lawyer or an accountant to get everything in writing before you buy anything. All right, let's get into it. Here are 4 common ways investors structure joint venture purchases for real estate deals in Toronto. Option number 1, one person on title. In the setup, only one person is on title and on the mortgage. And having said that, that person would need to qualify fully on their own against their own income or their net worth or both. And everyone else comes in through a joint venture agreement where you spell out the ownership split and responsibilities. Now, this can be a great way to scale if all of the partners have solid borrowing power. You can rotate and go on title for each property, which spreads out the mortgage load and lets you buy more properties all together. Now, why does this matter? Well, most banks do cap individual borrowers at around 5 mortgages. And if you're always buying together, you would only get a total of 5 between all of you. But if you end up rotating across partners, and say you have 3 partners, it's potentially 15 properties if you do it this way. Plus, only the person on title has the mortgage showing up on their credit report, which could help the others preserve their borrowing capacity for the next deal. The catch here is trust, because that person on title does have full legal control, even though the JV agreement says otherwise. So it is critical to work with people you trust completely and get a solid legal agreement in place. Now let's move on to option number 2. Everyone goes on title together. Now this is a more balanced setup where all the partners are on the mortgage and title together. You can combine incomes to qualify, which does help if no one can get approved solo. Everyone also shares ownership directly, and no one can make big moves like selling or refinancing without the others. The downside is that that same mortgage would show up on everyone's credit report, and it would eat into everyone's borrowing capacity equally. So for example, say it's a $1 million loan. Even if you only own a third of the property, the bank sees you as carrying the full $1 million loan. And that can make it harder for you to qualify for your next investment because of the debt ratios and property count limits. So while the structure is simple and feels fair, it can slow down your ability to scale as a team. Now let's move on to option number 3, owning through a corporation. Here, a corp holds title of the property and each partner owns shares in that corporation. You'll usually still need to personally guarantee that mortgage because it's a completely new company, but in some cases, the loan won't show up on your personal credit report, which can help protect your ability to borrow again. This setup also makes things feel a little bit more official. One entity holds the title, pays the bills, and collects the rent. But here's the big tax trade-off. Rental income is considered passive income, and corporations in Ontario get taxed heavily on passive income, over 50% most likely. Now you might be able to recover some of that when you pay out dividends, but it's still not as efficient as being taxed personally. Plus, corporations come with more admin, annual filings, corporate bookkeeping, legal costs. So this would work best when you plan to build a bigger portfolio or you need a separate brand or operating company to manage multiple properties. Option number 4, bear trust with corporation on title. This is a more advanced structure, but it can offer some benefits of both personal and corporate ownership. In a bare trust structure, the corporation goes on title, but it's only holding the property on behalf of the true or beneficial owners, who are usually the partners in the deals. So for tax purposes, the income and capital gains flow straight through to the individuals, not the corporation. So you're taxed at personal tax rates and you avoid the higher corporate passive income tax. You still might be able to keep the mortgage off your personal credit report, depending on the lender, but keep in mind, this setup does not offer the same liability protection as a full corporate ownership. The Corp on title isn't really the owner in the eyes of the CRA, the individuals are, and where the structure really shines is with estate and long-term planning. If you ever want to change ownership structure, you can often do it a lot more easily without triggering land transfer taxes or capital gains taxes, as long as the beneficial owners remain the same. So, which option is best? Well, there really is no one-size-fits-all answer. It really depends on your income, your credit, or your long-term goals and the people you're working with. And if you're not sure what you can afford or what a deal might cost you, check out this free mortgage calculator on our website. It's built for Toronto investors and it helps you estimate what you can qualify for, factor in renovation budgets, and break down monthly carrying costs too. And if you are ready to dive into multiplex investing here in Toronto, our team can help. We're a real estate sales brokerage in Toronto that works specifically with multiplex investors like you. Whether you want a turnkey multiplex or a value add project, we can help you find solid deals, run the numbers with you, and guide you from purchase all the way through to renting it out. Just book a free strategy session at the link right here, and let's help you find smart cash flowing multiplexes in Toronto together.